So the big news in real estate this week is that the Fed lowered interest rates for the second time this year. And right now, interest rates are actually the lowest that we have seen in 3 years, which is a very good thing for home buyers. But it's complicated because what actually happened is the minute the Fed made this announcement, mortgage rates actually went up a little bit. Not a lot, but they shot up a little bit because there is always some speculation and I think a sentence that the Fed chair said kind of spooked the market a little bit. But again, it's all interpretation and it's really largely speculation. But this is a super interesting time. And I think the way to best explain it to somebody at home, why does sometimes things go backwards? But when it comes to lenders, if you think through like when you go to a restaurant, okay, the restaurant is going to buy the food and supplies at a wholesale price, right? And then they're going to charge you more. There's a markup and that's a retail price, but they've made your life easier. They've made the food taste better and there's convenience and ambiance and you don't have to do any dishes, right? So what lenders do is they borrow money based on the treasury yield. So that 10-year treasury number is what we really pay attention to in real estate. As that tends to tick down, so do mortgage rates, okay? And that is ticking down, and that's why mortgage rates are going down. But if the treasury yield is around 4.2 where it is now, then rates are 6.2, 6.4, right? And that's what we call the spread, the markup for you as the consumer, because the golden rule when it comes to finance is he who has the money makes all the rules, right? And if you're not sitting on the hundreds of $1,000s that you need to buy the house, then you have to borrow the money, which most people do. And we're in this gridlock situation. We've got over 60% of homeowners have a mortgage rate that is 3% or lower. Well, there's still a big delta between a 3% mortgage rate and the convenience of not moving versus a 6% interest rate that we see today. And so sellers are sitting on record equity. We are looking at record sales prices. And so there really isn't this huge motivation for the majority of sellers because they're doing basic math and the math is not mathing in their favor. And so I would just say, do the best you can when you can. Don't ever hesitate to reach out. It's never too early. I'll see you on the next video.